Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Across the commodity spectrum, our support and resistance boundaries have been proving to be quite successful. Last week, for example, we talked about the September corn contract and how 336 was going to be potential key resistance. The market came up and tested that 336 area, stopped and paused, and now we see about 2 or 3 days down from that area after it was tested. We saw very good support off of the low, and currently now we're looking at about 318 again, between that 318 and 336 to be defining boundaries for this market as we close out the rest of the month. If we're able to break through or break above the 336, the next boundary that we would be looking at is 345, although we still believe that this could be a challenging area for this contract to reach prior to coming off the board. On this chart, we're able to see where the price per day price movement that is marked off by this red diagonal line, as the market comes up and comes in to touch it, right as it touches it here, you'll notice the market found very good resistance and then has tapered off from there. But again, these natural point per day support resistance levels or lines often serve as very nice transitional points for the market for reversals. On this chart, we have our point of control sitting at 396. 2 standard deviations below that point of control is at 330.5. We're currently trading very close to that 330.5 number in current price action, and so that 330.5 should serve as a very key transitional level this week for this market. I anticipate that we could see some strength above and continued weakness below. As forecasted for the December corn contract, we can see clearly that the market has been in a sideways range-bound movement between our 270-degree mark of 347.5 and the low down at 329. As long as we continue to transition below here, the market will continue to consolidate, and it will clearly need to break either above the 347.5 or the 329 below in order to trend in either direction. But for now, we're continuing to anticipate that the market will trade or consolidate inside of this trading band or this trading region. We also have a key demarcation factor in terms of time that we want to consider. Close to the end of the month, we see this purple box where it begins right along this hash mark here, which is right at about August 27th, 28th or so. These boxes that we have often mark off for us potential seasonal or potential time cycle turns for the market. Depending on how the market looks to approach this area or this region, we would look for the market to make a reversal upon touching or very close thereof to that timeline. Additionally, we would like to see a turn in the market happen at the end of this timeline and potentially another turn at the end of this gray box here. And so we'll be keeping close watch of how the market reacts at each of these transitional periods. But these are timing factors for us that enable us to have a perspective for short-term time transitions in this contract. Here we can see again the power of the price per day transitional timing angle. That price per day angle, which is this red angle that we see that is moving to the upside, again, does a very good job of determining what appears to be a nice high for this market from its low back several weeks ago. So as we look at the markets here, we like to use these timing angles again to help us give us perspective for potential turn points in a trend or in a pullback in the markets. For the September soybean contract, there were a number of factors that suggested to us that the uptrend or this pullback was due for a pause. When looking at markets in terms of the Fibonacci numbers, the Fibonacci numbers give us some good indication as to where markets look to pause And we could use those numbers not only in terms of price, but also in terms of time. So for example, we know that some of the Fibonacci sequence numbers land at 5, 8, 13, then 21, etc. Here what we find from the low that was made, that if we move up 14 bars, which is only one number beyond the Fibonacci 13 number, as well as 20 calendar days, which is one number shy of the Fibonacci 21, that the market comes in and makes a significant stop or pause here, and since then the market has been kind of sideways over the last couple of days. Additionally, we have one more Fibonacci number where the move from this low up to that high comes in at right at about 8%. So we have three key Fibonacci sequence numbers coming in all at around the same time, which is making for what appears to be a potential pause in what has been a nice little up move inside of this September soybean contract. Now, it doesn't mean that the market's going to stop here or that the trend is done, etc. But what we are noticing is that managed money is starting to get a little bit skittish as the news that they were looking for to help to justify the continued price advance just is not coming in. That being the case, once managed money begins to unwind their net long positions, we're going to see a potential very nice move to the downside in the soybean complex. The high that was made a few days ago was at about 1041, which is very close to the 1047, which is one standard deviation above our point of control. So we see several kind of components coming together telling us that this market was due at the very least for a potential pause. And right up at about 1047, we see near-term resistance. Now the caveat here is that we also see a potential continuation pattern setting up. So if this market's actually able to make a ground and break above this 1047 to 1050 area, as we had about 1050 as a potential target for this market, reaching beyond this 1050 would be an indication that the market could very well make an advance that would mirror the length of what it's done beforehand and come out on the other side and do the same thing. Now this contract's running out of time, and so what we would be looking for is for this type of movement to occur in the November contract. Now the likelihood of a breakout to the upside is quite unlikely given the huge amount of supply that we're seeing, and as we're entering into the first week of September, we anticipate that the market's going to continue to drag. Although a move up is possible, we believe it is unlikely. Here we can see the market really having trouble getting beyond this 90-degree 1021 area that we spoke of in the past. This area is posing as very good resistance. Again, I think the market can find strength above, but should continue to find weakness below. Additionally, the market has become overbought, but this overbought has now started moving sideways. If this overbought area can continue in this fashion for a continued amount of time, what we would be noticing then is that we'd be seeing a transition from being overbought to a potential change in trend. Again, as mentioned before, the potential for a move to the upside is possible. We believe it is unlikely, but we cannot fight the tape. This chart's not giving us very much new detail outside of being able to see the downward sloping price per angle timeline. As the market came in and got fairly close here, it posed as reasonable resistance, and it continues to contain the market down inside of here. But outside of that, we're not seeing much from the lines containing the markets as far as support and resistance is concerned. We're very well or very far away from either one standard deviation above the point of control or the point of control itself, which sits at 960. So we're right in the middle of that area. So we need to see the market make a rise either to 1050 or drop back down to about 1060 or so to find really clearly defined support or resistance. The September wheat contract has a number of really nice things occurring here. We can see the move up from the low, counting up 13 bars. We also have about 7 buyer's bars in the sequence on the way up, both of which are very close to Fibonacci sequence timing numbers. We also have the range percentage at 8 and the range traveled at 33. So 13 is a Fibonacci number, 8 is a Fibonacci number, and 34 is a Fibonacci number. When all of these components came together, we have what we call potentially a square root of price and time, telling us that the market is potentially exhausted. We're looking for the neighborhood of about 436 to be key resistance. The market came within a few cents of that number and has since been moving down. Given the nature of how it has moved down, and in fact, we've looked at some of our other analyses and found that we had very good divergence as the market was making its move up, volume was declining, telling us that the advance was not a condition of buyers coming into the market, but instead it was a lack of sellers. Now sellers have come back into the market a bit, and what we're looking at is a potential minimum price objective of 392, and we can see the price even go down as low as 385 before coming off the board. Then finally, the December crude oil contract is where we really first introduced to you the notion of the Fibonacci time count. Here we can see from the low up through the high, marked 13 days, and the market came in, reached our key resistance area, and the market had a very big response to the downside after reaching that 13-day mark up from the low. The market has still continued to be down since then, but now we're looking at potential support to come in near 46 or so on this December crude oil contract. We had also pointed out a few reasonable expectations for where we can anticipate the move to the upside to pause. We suggested that 46.21, 47.62, and then 51.13. Additionally, we did point out that 50.74 was also a potential key area where this market could very well show us an indication where the market would look to pause. That 50.74 was very close to where the market topped. It has since moved down. We're looking at 48.26 right now in terms of where market is currently trading nearby, but we do like potential support somewhere in the neighborhood of 46.21 or so. Thank you so much for joining us for our weekly market update, and look forward to touching base with you again next week.